Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, let's shift focus to the pharma space then. Dr. Reddy's will be in focus. Remember, it's a bit of a setback for the company after the US District Court. They converted a temporary injunction against the generic Suboxone into a preliminary injunction. Ekta, this is not going to be viewed positively, isn't it?
Oh, it is definitely going to be a negative for Dr. Reddy, simply because, the street was expecting this temporary injunction to probably go in favor of Dr. Reddy's and the court to probably rule in favor of Dr. Reddy's, simply because this particular drug that we're talking about, Suboxone, is actually quite an important drug in the US market if you look at it in the context of the anti-drug addiction measures that the US government is taking. So the cheaper a drug which helps in such a case, the better it is for the US citizens. But so in that case, everyone was expecting maybe a favorable outcome, but that's not happened. So what basically is the case from here on is that Suboxone generic will not be launched by Dr. Reddy's until the final patent litigation which is going on with Indivior is solved or not. So in that case, Dr. Reddy's is probably going to see an opportunity loss when it comes to less sales, plus they're going to have litigation costs that they're incurring. But the positive or the silver lining is the fact that Dr. Reddy's has managed to get approval for an important drug such as this. So that's probably the only positive takeaway, but net, it's a negative because the street was expecting them to probably make up to $75–80 million annually in terms of sales.
Okay, all right. So we'll keep an eye out on Dr. Reddy's, but we've been waiting for Oro Pharma. There's been so much of talk that they're going to be going out there and doing some acquisitions. Part of that played out over this weekend.
Yes, absolutely. Well, for Aurobindo, it was positive news which came in, if you look at it, because, if you just go back into their conference call which they held on for their Q4 numbers, they had mentioned that Europe is going to be a focus in terms of acquisitions for them. So that exactly is what has come through. They've acquired Apotex's operations in the European Union, which is basically mainly in Eastern Europe. Small acquisition, 74 million euros, and they've acquired it at quite a discount because the sales of the entire operations is 133 million euros. Some of them are currently loss-making, so they are saying that they're going to turn it around. Plus, there's not going to be any sort of stress in terms of the balance sheet when they acquire these companies. So net, it should be positive for Aurobindo. But the negative is that now what happens with Mallinckrodt? I understand from sources that they've put in their bid, but they're still waiting to hear from Mallinckrodt in terms of the acquisition. It's been around maybe a few weeks since they haven't heard from the company itself or from the bidders, from the entire bid process. If that comes through, then that would be a negative. So that overhang still remains for Aurobindo. So while this is all positive news, that particular overhang remains. Okay,
all right, Ekta, but let's stay with pharma. The government has set up a standing committee to review the national list of essential medicines. The price of the medicines in the list is capped by the government, essentially. That's the meaning. Ekta, this notification is dated 3rd of July, which you have access. Tell us, what's the impact there?
Yes, absolutely. Well, on Friday, a lot of the companies started, taking notice of this particular notification by the government, which was dated July 3rd, saying that they're going to form an NPPA body. This particular NPPA body is going to, what's going to happen is that they're going to decide on the national list of essential medicines, but they are also probably going to include medical devices, medical consumables, anything that helps in, and affects the health and hygiene of Indian consumers and patients. So that is probably going to be read as a little bit of a negative because, we've seen knee plants, we've seen stents come under price control. Now there will be a discretion of this particular standing committee to look at other medical devices as well. So that's obviously a negative which is coming in. This standing committee is going to comprise of more than 18 people from various different ministries. And interestingly, the NPPA, we don't know how important a role they'll eventually play in this particular committee. For the National List of Essential Medicines, right now around 20% of all the medicines which are sold in India come under price control. So now the fear is that maybe there could be a revision which could be for or against the pharma industry. We don't know about that.
Okay, all right, Ekta. So that's about the pharma space. So moving on, Essar Ports is looking to enhance its port handling capacity to around 110 million tons per annum. Now, in fact, we here at CNBC TV18, we spoke to Mr. Rajiv Agarwal, the MD and CEO of Essar Ports. Let's hear out what he had to tell us.
For this terminal, we have put about 860 crores in creating this facility. Basically, it was an existing facility which was tendered out to us by way of a PPP project, and the job was to upgrade this whole facility and operate it for 30 years. So what we have done here is that we have replaced all the major equipments like the loader, the conveying system, the stacker reclaimers, the tippling system, receiving system of railways. So with all of that, now it's been upgraded to be a 24 million ton facility on a single terminal, which will be used for exporting iron ore from here through very large ships. So the uniqueness of this terminal is that it can load up to 120,000 tons a day. It can bring in here the largest of Cape-size vessels, like the one you see here, which are about 200,000 tonners vessels, and it has a loading capacity of 8,000 tons per hour. Apart from that, it also has a very good receiving facility, rail receiving facility.
Could you highlight for our viewers what is the way forward for the rest of the terminals that you have in India? Are there any plans as far as further investments are concerned there?
Yeah, in Hazira we are investing further because we are expanding it from 30 million tons to 50 million tons. We also want to make it into, apart from dry bulk, into liquid bulk terminal and maybe LNG. So, we have some investment there. Apart from that, we have just commissioned another terminal in Salaya, which is again on the west coast near Jamnagar. And we have one terminal in Paradeep, which is again like this for iron ore loading. So these are the 4 terminals that we have in India. Apart from that, we are also looking at a greenfield development in Mozambique in a coal terminal of 20 million tons.
After delisting, has the idea of listing again on the stock exchanges come as far as the company is concerned?
See, as you know, we divested one terminal, which is the liquid terminal at Vadinar. We divested last year. Then we have been ramping up. We have set up these 2 terminals, one at Vizag, another at Salaya, since the delisting took place. These were at the moment, at that time, they were in progress, and we are expanding capacity. So we are happy to grow as we are growing in this state. And who knows, maybe at a later stage how we decide. But at the moment, we are trying to increase our size of business, and we are expecting that by end of this year, we will again come back to our original size before divestment.
Well, Tata Motors is likely to be under pressure today as Moody's has downgraded the rating on credit weakness. Sonia is with us early this morning to run us through all those details. Hey Sonia, good morning.
Hi, good morning. Thanks a lot. Yes, Moody's has kept the outlook of Tata Motors stable, but what they've done is gone ahead and downgraded the rating for the company. They've downgraded the corporate family rating from BA1 to BA2. They've also downgraded the senior unsecured instrument rating from BA1 to BA2. And they expect continued weakness for the Jaguar Land Rover business over the next 2 years. They say that the obligations rated BA2 have substantial credit risk, and there are a few issues, rising commodity prices and operating challenges will keep the margins below 3% overall for Tata Motors. Also, they say that the balance sheet is very stretched for Tata Motors right now. The debt to EBITDA has risen to 3.8 times versus 3 times last year. 3.8 times is as of March 2018, and it is likely to remain quite elevated. Large capital and product development expenditures at Jaguar Land Rover of £4.5 billion annually will also keep, the balance sheet very stretched for Tata Motors. So I expect the stock to be under pressure. In any case, the stock has fallen 40% in 2018 and is sitting at a new low. So perhaps more pressure expected today.
Okay, all right, Sonia. Thanks very much for that. Well, DCB Bank will be reacting to earnings reported on Saturday, which were disappointing. Abhishek is here with the highlights.
Good morning, Ekta. While the balance sheet growth actually remains strong, the P&L otherwise is speaking of a reversal trend, that is a low growth. So you look at the loan growth at 30.6 is the highest in last 7 quarters. However, NII growth has been lagging behind, and that has impacted the NIM. NIM at 3.9% is the lowest in 11 quarters. So for third consecutive quarter, we have seen loan growth picking up, but NII growth coming down. Operating profit for the first time is below 4%. So apart from from NII, the lower other income or the bond impact has been seen on other income. The slippages at 107.5 crores is the highest in last 13 quarters, and that impacted the gross NPA, as gross NPA ratio shot up to 1.86 versus 1.79 in the previous quarter. NII growth of 17%, profit growth of just 6.5%. Expect the stock to react negatively in trade today.
Okay, all right. Thanks so much for that, Abhishek. But let's get straight then to some football action. Now, in a historic FIFA World Cup final.
Welcome back. Well, Manisha Gupta is here with us with an update from the commodity space. Manisha, morning.
Hi, thank you so much for that. Well, let's start with the metal space right now, because the last week wasn't such a great one. We saw copper prices decline yet again to a 12-month lows. Copper actually has been falling for 5 weeks now and has lost 15% of its price value in these 5 weeks. But what is most important to look forward really is for aluminum. That one is trading at a 3-month lows, and the markets would be keenly watching out for the US President Trump and the Russian President Putin meeting in the summit today at Helsinki. And there are expectations that there could be a conversation on the US sanctions on Russian companies, especially Rusal, and we could see some easing or lifting of sanctions on Rusal, and that might really tell you on where the aluminum prices are headed. So as of now, the markets are anticipating that there could be an easing of sanctions and that the supplies in the global markets will increase, and that is the reason aluminum prices have started the week on a weaker note.
Okay, all right. Thanks so much for that, Manisha. But let's go across. Mangalam's with us today. He's going to tell us about the derivatives market and also tell us what to expect from Hindustan Unilever. Morning, Mangalam. Well, the stock's trading at lifetime highs. What are we expecting there?
Absolutely, Nigel. You know, over the last 3-4 quarters, the stock has been trading at record highs, just ahead of the numbers. The street is expecting a good quarter. And for Hindustan Unilever, you know, every quarter we've been saying that the stock trades at record multiples, currently trading at 51 times FY20 earnings, and the street is expecting a good set of numbers. Why a good set of numbers? Because it's all about the base. Remember, the quarter year on year, we had the GST-related destocking, so volume growth was 0%. On the back of that, we're expecting a good quarter. Secondly, the previous quarter on quarter also, the rural demand is picking up, momentum is picking up, so we are expecting a good set of numbers. So just to run you through the basic numbers, we're expecting a revenue growth of 13.5–14%. The number you should be looking out for is close to around that 9,700 crore mark. EBITDA close to around 2,200 crores for Hindustan Unilever in the first quarter of FY19. Margins likely to improve by about 100 basis points. This is on account of two things. One, increased realizations, increased premiumization, and secondly, the parents' focus on cost control should aid their margins. The second thing, on the back of close to 14% revenue growth and 18% EBITDA growth, the net profit likely to grow by about 20%. The number you should be watching out for in the press release is the underlying volume growth. This time, the street is working with numbers of close to around 11 to 12%. And remember, the first quarter FY18 saw destocking, and the previous quarter on a base of 4% saw the volume growth at 11%. Right now, we have a base of 0%. Can the company go ahead and do more than 11–12%? That is something that the street will be watching out for. A majority of their revenues as well as their operating profit comes from home care as well as personal care. So their growth is likely to be positive. Apart from that, watch out for some improvement in the EBITDA of their foods business, which is a smaller part of their business, but showing tremendous growth. Management commentary on rural growth as well as demand uptick is something we will be watching out for.
Okay, and Mangalam, what about the F&O space?
Well, Ekta, as far as the F&O space is concerned, it has been positive. While the Nifty was flat on Friday's trading session and we saw around 1,100 crore worth sale in the cash market, the FIs, they're pumping in money in the index futures space. Close to around 1,500 crore worth purchase in index futures out there. The FIs bought about 8,600 longs, covered around 8,100 shorts. And we've been talking about FII's long exposure. At the start of the series, it was 35%. Now it's reversed and it is 53%. The only worry perhaps could be the put-call ratio, which is closer to 1.8 than it is to 1.2, a level that we usually keep an eye out on. So 1.8 to 1.79 thereabout put-call ratio is something we'll be watching out for. The most interesting stat from the F&O space was the fight for 11,000. We saw writing in the 11,000 put and we saw covering in the 11,000 call. And 11,000 call, which has the maximum open interest right now, is it has been crossed by 11,000 put. So 11,000 put has 33.6 lakh shares in open interest, a little more than the 11,000 call itself. Watch out for that. Some shorts written on PVR and Z. So keep an eye out on these two stocks as well.
Okay, all right, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.